Let's welcome in our market master of the day. Taher Badshah is Chief Investment Officer at Invesco Mutual Fund. Taher, good morning. Good to have you with us here. Thank you very much for your time. So let's just start with earnings, Taher. What are you making of the earnings so far, and what's standing out for you? Any trends, any threads you want to pull on, which gives you a sense of which way, which parts are doing well, which parts are weakening? Go on.
Yeah, so I think we started off as usual with the tech pack, and that was obviously something which was a little mixed in my view. I think it once again probably gave it a feeling that we need to look at it a little more from a more longer term perspective. Things can get pushed back a little bit more than what we had anticipated. So, but even within that, then I think some of the mid caps clearly stood out and managed to deliver some better growth compared to some of the large caps. So there was a mix out there too. But in general, I think I felt that things could probably take a little longer there compared to what was our expectation earlier. Followed by the banks, which in general have done quite okay under the circumstances. I think NIM pressures, which were evident as usual, as was expected. I think more recently within the BFSI, particularly over the last couple of days, we've seen some segments and pockets where we've particularly on the retail side, we've seen a little bit of stress. And that's something which therefore becomes a monitorable from here on. So we've seen it in multiple forms within the BFSI segment, and particularly in the NBFC space. You called out a couple of names in the recent times as well, just a while ago. So I think that's how it has been. But by and large, I think it's been reasonably decent. We've seen some auto results which have been quite good, although near-term trends in terms of festive season, etc., still need to be monitored. So I think the December quarter then in that case will be crucial. We have some bit of ground still to cover within the result season, but by and large, I think it is still pretty much a decent inline result season up until now.
Okay, by the way, the stock of the moment on the upside is Cipla. It's 3% higher now, and despite the rally that we've already seen, brokerages have very ambitious target prices. Cipla is the one I'm talking about. Citi has raised their target price to 1380 on Cipla, so that's still much above the target price. And, people I'm sure are very excited about the weight loss drug, semaglutide. By the way, Cipla is going to launch it in its oral form in India. So that is, I think, the big excitement. But I want to tell you, Prashant, that there are a lot of side effects. Nausea, diarrhea.
Oh, yeah. And by the way, those are only the garden variety side effects. There are more serious side effects as well, which sold, the brand name is called Ozempic in the US. And they actually, there's a black box side effect warning, serious stuff. I mean, so you got to...
Absolutely. Yeah, I mean, and it's gone viral as well in the US. So... well, got to be careful here. But Taher, hi, good morning. How are you feeling about the market now? There is, of course, this geopolitical crisis that we have to deal with. Do you think that this is a good buying opportunity for long-term investors, as has been the case with earlier geopolitical issues? Or are you a bit more cautious this time?
Yeah, I think I continue to still maintain a very positive view as far as the market is concerned, particularly from a domestic standpoint. I'm pretty constructive. I take a lot of confidence in the investment cycle, which is currently in progress in the country, and I think that can extend itself. Intermittent volatilities, which we witnessed in the last some time, should clearly be considered to be investment opportunities. We were expecting a lot of volatility along the mid and small cap space, but actually, if you were to probably wind back to the last 1 month or so, the small cap space has probably actually stood out the best. We've seen a lot, relatively more pressure on the larger caps, probably the Nifty as well as the mid-cap index, which are down about 4% versus the small-cap index, which is relatively flat. So I think there is a message in it in the sense that, there is a fair bit of activity at the ground level. The domestic economy being strong is actually widening the set of opportunities and probably bringing in more domestic-oriented businesses into play. So from a portfolio standpoint, we do try to keep a little more focus towards and tilt towards the domestic stories. That's why we continue to find opportunities. So in general, relatively more constructive.
All right. Hi, Taher. Good morning. Talking about the domestic stories, the BFSI space actually, if I look at earnings for the last two quarters, the earnings cuts have not happened in BFSI or in autos. They've had in other sectors. So in terms of earnings visibility, the BFSI space is placed quite well. The problem is, though, it's been underperforming. What's your view out there? How do you approach this sector? Earnings visibility is there. You have return ratios that are looking good. Offtake has been looking quite good, credit offtake as well. But still, that space is underperforming. Your take?
So I agree, Nigel. I mean, there's been a frustrating period, at least over the last couple of years, as far as banks is concerned, and valuations have kind of been steadily dipping down. I think we continue to at least keep confidence in the fact that book value can continue to compound at about anywhere between 12 to 15% for most of the banks, even in the next 2 years. Even keeping in mind the possibility of pressure on NIMs or profitability in general. So I think if we are set up for a decent credit growth in the system, we should be able to track that kind of book value growth. And then, as you rightly mentioned, now valuations are no longer as demanding. In fact, I would say that they are relatively more on the cheaper side. There's a plethora of banks, and we can make our choices. And it gives a fair bit of opportunity to build a decent position out there. So we continue with a reasonably neutral stance, neutral to marginally positive stance as far as banks is concerned. In a more recent past, like as I said, we've veered more towards the domestic side. So within the larger buckets of the market, we have tried to pull in a little more weight as far as the banking sector is concerned.
Right. Taher, the consumer seems to be not doing all that well, right? Taher, that's again another indication. So I think we've had numbers from. Okay, I think we'll just have Taher back with us in a bit from now. Okay, I think we have a bit of an issue as well with the connection. So we'll, Taher, thank you on that note. Thank you very much for joining us. I had a question, but I guess we'll pick up on that next time. Thank you very much for joining us, Taher, and great to have you with us here. I think.